Welcome to Wealth Wisdom. If you have ambitions to achieve financial success, please leave "yes" in the comments, and we are here to help you obtain insight and build wealth. There are universal rules of money that separate the wealthy from everyone else. These aren't secrets, they're principles that have worked for centuries. Master these rules, and you'll build wealth. Ignore them, and you'll struggle financially your entire life. Today, I'm sharing the 12 most important money rules you must master. These are the principles I wish someone had taught me at 18. They've transformed my financial life, and they'll transform yours too. Let's dive in. Rule 1. Pay yourself first. This is the golden rule of wealth building. Before paying bills, buying groceries, or spending on anything else, pay yourself first by saving and investing. Most people save whatever is left at the end of the month. That's why they never save. Wealthy people reverse this. They save first, then live on what remains. Set up automatic transfers the day you get paid. Move 20% minimum to savings and investments before you can spend it. Treat this like your most important bill because it is. You're paying your future self. When I started paying myself first, my savings rate jumped from 5% to 35% overnight. I didn't feel poorer. I just adapted my spending to what remained. That single change accelerated my wealth building by 7 times. Rule 2. Live below your means. This seems obvious, but most people violate it constantly. Living below your means isn't about being cheap. It's about spending less than you earn so you can invest the difference. The wealth building formula is simple: income minus expenses equals investment capacity. The bigger the gap between what you earn and what you spend, the faster you build wealth. I know people earning $200,000 living paycheck to paycheck and people earning $50,000 building substantial wealth. The difference? The $50,000 earner lives on $35,000 and invests $15,000 annually. The $200,000 earner spends $205,000. Here's the key. As your income grows, increase your savings rate, not your lifestyle. When you get a raise, save the entire increase. This is how you accelerate wealth building exponentially. Rule 3. Make your money work for you. Trading time for money has limits. You only have 24 hours daily. But money can work 24/7 without rest. Wealthy people understand this fundamentally. Your goal is creating assets that generate income without your active involvement. Investments, rental properties, businesses with managers, royalties, these all produce money while you sleep. Calculate your money's hourly wage. If you have $10,000 invested at 10% annual return, that's $1,000 yearly or $2.74 daily. That $10,000 works 24/7 earning you money. Now imagine having $100,000 or $1 million working for you. Every dollar you invest is an employee working for you forever. The more employees you have, the wealthier you become. Rule 4. Understand good debt versus bad debt. Not all debt is evil. Understanding the difference between good debt and bad debt is crucial. Bad debt finances depreciating assets or consumption. Credit card debt for vacations, car loans for new vehicles, financing furniture, these make you poorer. You pay interest on things losing value. Good debt finances appreciating assets or income-producing investments. Mortgages on rental properties, business loans that generate returns, student loans for high-income careers. These can build wealth when used strategically. The rule: never borrow money for consumption. Only borrow to acquire assets that will generate returns exceeding the interest cost. I use debt strategically for rental properties where tenants pay the mortgage. This leverages my capital to control more assets. But I drive a paid-off car and never carry credit card balances. Rule 5. Build multiple income streams. Relying on a single income source is risky. Job loss, industry disruption, health issues, any can devastate finances if you have one income stream. Wealthy people have multiple income sources. A full-time job, side business, rental income, dividend stocks, freelance work. Diversification protects and accelerates wealth building. Start with your primary income, then add one additional stream. Once that's established, add another. I have 5 income streams: salary, freelance consulting, rental property, dividend stocks, and online course royalties. This diversification provided security during economic downturns and dramatically accelerated my wealth building. When one stream slows, others compensate. Your goal: build at least 3 income streams within 5 years. Rule 6. Invest in yourself first. Your earning capacity is your most valuable asset. Investing in skills, knowledge, and expertise provides the highest returns. A $10,000 course that increases your income by $20,000 annually provides a 200% first-year return and continues paying dividends for decades. No stock market investment consistently delivers those returns. Successful people spend 10% of income on personal development. Books, courses, coaching, conferences, these compound your earning power faster than any financial investment. I've spent over $50,000 on education and skill development in the past decade. That investment increased my income by over $400,000. The ROI is impossible to match with traditional investments. Invest in yourself relentlessly. It's the one investment nobody can take away from you. Rule 7. Save for emergencies first. Before investing, build an emergency fund. This is your financial foundation. Without it, unexpected expenses will derail your wealth building repeatedly. Start with $1,000 minimum, then build to 3-6 months of expenses. Keep this in a high-yield savings account, accessible but separate from daily spending. This emergency fund prevents using credit cards for unexpected costs. It's insurance against financial disaster and provides peace of mind to take calculated risks. When my car needed $2,000 in repairs, I paid cash from my emergency fund and replenished it over 2 months. No debt, no stress, no derailed financial plans. That's the power of emergency funds. Rule 8. The power of compound growth. Einstein allegedly called compound interest the 8th wonder of the world. Understanding this principle is crucial for wealth building. Compound growth means earning returns on your returns. Your money grows exponentially, not linearly. The earlier you start, the more powerful it becomes. Example: invest $5,000 annually starting at age 25. At 10% returns, you'll have $2.2 million by 65. Start at 35 instead, and you'll have only $822,000. That 10-year delay costs you $1.4 million. The key is time and consistency. Even small amounts invested early compound into substantial wealth. Don't wait for the perfect moment. Start now with whatever you can afford. Rule 9. Avoid lifestyle inflation. This is where most people fail. As income increases, spending increases proportionally or faster. This trap keeps even high earners broke. Lifestyle inflation is natural. You want to enjoy your success. But unchecked, it prevents wealth building. You're always spending everything you earn, just at a higher level. The solution: when income increases, split it. Increase your standard of living by 50% and save the other 50%. This lets you enjoy success while accelerating wealth building. When I got a $15,000 raise, I increased my spending by $7,500 and invested the other $7,500. I improved my quality of life while dramatically increasing my savings rate. Be conscious about lifestyle upgrades. Every dollar spent on lifestyle is a dollar not working for your future. Rule 10. Time beats timing. People obsess over finding the perfect investment moment. They wait for the market to crash, the perfect stock, the ideal opportunity. Meanwhile, time passes, and they miss the most valuable asset, time in the market. Studies show consistently that time in the market beats timing the market. Starting early with imperfect timing beats waiting for perfect timing. Invest consistently regardless of market conditions. Dollar cost averaging, investing the same amount regularly, removes emotion and timing risk. You buy more when prices are low and less when they're high. I've invested through market crashes, bubbles, and everything between. My consistent investing over 15 years has built substantial wealth despite making plenty of timing mistakes. Stop waiting for the perfect moment. The perfect time to start investing was yesterday. The second best time is today. Rule 11. Know your numbers. You can't manage what you don't measure. Wealthy people know their financial numbers intimately. Net worth, monthly expenses, savings rate, investment returns. These numbers guide their decisions. Most people have vague ideas about their finances. I think I spend about, or I probably save around. This ignorance prevents intentional wealth building. Track your net worth monthly. Calculate your savings rate. Know your exact monthly expenses. Review investment performance quarterly. These numbers tell you if you're progressing or stagnating. I track my net worth the first day of every month. Seeing it grow motivates continued discipline. When it stalls, I analyze and adjust. This awareness has been crucial to my financial success. Spend 1 hour monthly reviewing your financial numbers. This simple habit will transform your wealth building. Rule 12. Focus on assets, not income. Most people focus on increasing income. While important, this is only half the equation. Wealthy people focus on accumulating assets. Rich people have high incomes. Wealthy people have valuable assets. You can have a high income and no wealth if you don't convert income into assets. Assets appreciate and generate income. Income is what you trade time for. Build assets systematically, and eventually, they'll generate more income than your job. My goal was never reaching a certain income. It was accumulating $1 million in income-producing assets. Once achieved, those assets generate income whether I work or not. Every financial decision should answer: does this help me acquire assets or does this consume resources? Choose asset acquisition consistently. Putting it all together, these 12 rules work synergistically. Master all of them, and wealth building becomes systematic and inevitable. Pay yourself first while living below your means. This creates capital to invest. Invest in yourself to increase earning capacity. Use multiple income streams to accelerate asset accumulation. Understand debt to leverage assets wisely. Track numbers to stay on course. Start with one rule. Master it, then add another. Within a year, you'll have transformed your relationship with money. The wealthy don't have secret information. They simply follow these proven principles consistently over time. You can do the same. Your action plan. This week, set up automatic transfers to pay yourself first. Aim for 20% of income minimum. This month, Calculate your net worth and establish monthly tracking. Know your exact financial position. Next quarter. Identify one skill to develop that will increase your income. Invest time and money in learning it. This year. Establish one additional income stream beyond your primary job. Start small but start. These aren't complex strategies. They're simple principles applied consistently. Simple beats complex every time in wealth building. Conclusion: these 12 money rules have been tested by millions of successful people over centuries. They're not theories, they're proven principles that work regardless of your starting point or current income. The difference between financial struggle and financial freedom isn't luck, inheritance, or genius. It's understanding and applying these fundamental rules consistently. You now know the rules. The question is, will you apply them? Knowledge without action is worthless. But knowledge applied consistently transforms lives. If these money rules gave you a clear framework for building wealth, hit that subscribe button for more financial wisdom. Drop a comment telling me which rule resonates most with you or which one you'll implement first. Remember, the rules of money are simple. Following them is hard because it requires discipline and delayed gratification. But mastering these rules is the difference between financial freedom and financial stress. Your wealthy future self is counting on the decisions you make today. Choose wisely.